Hello friends, today we will discuss why a lot of homeowners in Canada are not able to renew their mortgages at the time of renewal. As you all know that we are running a promotion that when we reach 2000 subscribers, one name will be drawn from the list of subscribers and the winner gets $250 Costco gift certificate. The name will be announced on this channel, and thanks again for your overwhelming support on this channel. We are getting a great response and you are viewing my videos in thousands. Thank you very much. And just to point out that if you are viewing these videos in those numbers, just hit the subscribe button, friend. Not only you will not miss any video, your name will be drawn for a $250 Costco gift certificate, and I wish you all the best. Coming back to today's topic. As the housing markets fluctuate and economic conditions evolve, many Canadian homeowners find themselves facing unexpected hurdles when it comes time to renewing their mortgages at the time of renewal. While mortgage renewal is typically a straightforward process, certain factors have created significant obstacles for some homeowners. Not some, in fact, millions of homeowners. This article explores the key reasons behind difficulties the Canadians are encountering in renewing their mortgages. And the number one culprit, as we all know, is the rising interest rates. One of the most significant factors affecting mortgage renewals in Canada is the increase in interest rates. Over the past few years, the Bank of Canada has raised its benchmark interest rates several times to curb inflation and to stabilize the economy. As a result, mortgage rates offered by banks and other lending institutions have also risen. For many homeowners, this means higher monthly payments, making it more challenging to qualify for new mortgage at the time of renewal, especially the ones who got their last mortgage in the pre-pandemic era. Now these people are now finding it hard to renew because the current rate of interest that is being offered to them is almost 3 times higher. Not only they are not used to this rate of interest, the monthly payments are going overboard and people are finding it hard to sustain their properties. The second point is the stricter mortgage stress test. The introduction of a stricter mortgage stress test has also played a crucial role in the difficulties faced by homeowners. Implementing the Office of the Superintendent of Financial Institution, OSFI, this stress test requires borrowers to qualify for a mortgage at a higher interest rate than the actual rate offered by their lender. This policy aims to ensure that borrowers can handle potential future interest rate increases. However, it has also made it more difficult for some homeowners to qualify for mortgage renewal, particularly those with high debt levels or lower incomes. Then we want to discuss economic uncertainty. Economic uncertainty, including fluctuations in employment and income levels, has had a considerable impact on mortgage renewals. The COVID-19 pandemic in particular disrupted many Canadians' financial stability, leading to job losses, reduced incomes, and increased debt levels. For homeowners facing financial hardships, renewing a mortgage can be challenging, as lenders may view them as higher risk for borrowers. I should also talk about the decreased property values. In some regions, not in some regions, in fact all over Canada, particularly in some regions, especially where housing markets have cooled or corrected themselves, decreased property values have affected homeowners' ability to renew their mortgages. When the value of a property falls below the outstanding mortgage balance, the homeowners may find it challenging to secure a new mortgage without having to pay a higher interest rate or provide additional collateral. Now, another point is a very high household debt. Another important problem is the very high household debt in Canadians. Almost every family is carrying in Canada. Canadian household debt levels are among the highest in the world, which poses a significant challenge for mortgage renewals. High debt to income ratios can make it difficult for homeowners to meet the qualifying criteria set by the lenders. Lenders are increasingly becoming cautious about extending credit to borrowers with substantial debt burdens, particularly in an environment of rising interest rates. Now, there is also increased competition among the lenders. The mortgage lending landscape in Canada has become increasingly competitive, with banks and alternative lenders vying for mortgage share. While this competition can benefit borrowers through more competitive rates and terms, it can also result in stricter lending criteria. Lenders are more selective about the borrowers they approve, leading to increased difficulties for some homeowners at the time of renewal. There are also other things which are affecting their renewal, and the number one is changes in their personal circumstances. Personal circumstances such as change in employment status, divorce, or health issues can also impact a homeowner's ability to renew their mortgage. Lenders consider a borrower's overall financial stability and credit worthiness during the renewal process. Any significant changes in a homeowner's financial situation can lead to challenges in securing a renewed mortgage. The challenges of renewing private mortgages in Canada. Now, private mortgage is one special entity, and lot of people who are on private mortgages are facing huge problems at the time of renewal. I will discuss it in detail. Private mortgages have become an essential alternative for many Canadian homeowners who do not qualify for traditional bank mortgages due to various reasons such as credit issues, non-traditional income, or the need for quicker approvals. However, renewing these private mortgages can present unique challenges. This article explores the key reasons why homeowners in Canada are finding it extremely difficult to renew their private mortgages. Number one, I will discuss again, is the higher interest rates. Private lenders typically charge higher interest rates compared to traditional banks because they are taking on higher risk by lending to individuals who may not meet the stringent criteria of conventional lenders. When it comes to renew, these higher rates can increase even further, particularly in an environment of rising overall interest rates. This can make monthly payments unaffordable for some borrowers, leading to renewal difficulties. Another important point of private mortgage people are facing is shorter term of these private mortgages. Private mortgages come often with shorter terms, usually ranging from 1 to 3 years. Majority of them are 1 year as opposed to typical 5-year terms offered by traditional banks. As a result, homeowners find themselves needing to renew more frequently. Each renewal period brings the potential for changing lending conditions, reassessment of property values, and re-evaluation of the borrower's financial situation all of which can complicate the renewal process. Number 3 most important point on private mortgages is the stricter lending criteria. Although private lenders are generally more flexible than traditional banks, they still have lending criteria that can tighten over time. Economic conditions, regulatory changes, or shifts in lenders' risk appetite can result in stricter requirements for renewal. Borrowers who barely qualified for the initial private mortgage may find it challenging to meet the new criteria when it's time to renew. I will also discuss economic and market uncertainty. The economic uncertainty in Canada, including fluctuations in employment, income, and property values, can significantly impact the ability to renew a private mortgage. For instance, if a homeowner's financial situation has worsened due to job loss or reduced income, a private lender may be hesitant to renew the mortgage. Additionally, if the property value has decreased, the lender might require a larger down payment to or higher interest rates to offset the increased risk. There are also high fees and penalties. Private mortgages often come with higher fees and penalties, including renewal fees, legal fees, and appraisal costs. These additional expenses can be burdensome for homeowners, especially those already struggling financially. The cumulative cost of these fees can make renewing a private mortgage less attractive and extremely challenging. Now, there are limited options for refinancing if you are in a private mortgage. Unlike the traditional mortgages, private mortgages offer limited options for refinancing. Homeowners who face difficulties renewing their private mortgage may struggle to find alternative financing solutions, particularly if they have poor credit or unstable income. This lack of options can trap borrowers in unfavorable terms or lead to a potential foreclosure if they cannot secure a renewal. Now, there are changes in the regulatory environment. The regulatory environment in Canada for private lending is continually evolving. Changes in regulations aimed at protecting consumers can sometimes lead to stricter oversight and increased compliance costs for private lenders. These changes can impact the availability and terms of private mortgages, making renewal more and more challenging for homeowners. Over the period of time, I have personally seen in my practice that another important point why mortgages are not getting renewed is appraisals. A very significant and I think the most important reason people are not able to renew their private mortgages is that the appraisals are not coming in well these days. Let's say you bought a home sometime after 2020 at whatever value. The values since then have gone down because of the high rate of interest and people get stuck at renewal. And at this time the lender wants to do another appraisal, and I have seen it come short by over $100,000 to approximately $400,000 down depending upon the value of the property. Now, since the new loan to value has increased tremendously because of the lower appraisal, the lender wants to get their money back and the client gets stuck. Another important point again is discussing on this private mortgages is personal circumstances such as health issues, divorce, or significant changes in financial status can also impact the ability to renew a private mortgage. Private lenders reassess the borrower's situation at renewal, and any negative changes can result in a denial or loss or less favorable terms. So in conclusion, I can say that renewing a private mortgage in Canada presents unique challenges that differ from those associated with traditional mortgage renewals. Higher interest rates, shorter terms, stricter lending criteria, economic uncertainty, high fees, limited refinancing options, a changing regulatory environment, and personal circumstances all contribute to the difficulties faced by homeowners. Now, borrowers should be proactive in managing their financing and seek professional advice and explore all available options before their renewal date to improve their chances of successfully renewing with their private mortgage. While mortgage renewal should be a routine part of homeownership, various factors are making it more challenging for some Canadian homeowners. Homeowners approaching mortgage renewal should proactively address these challenges by maintaining good financial health, seeking professional advice, and exploring all available options to secure favorable mortgage terms. Friends, should you have any questions or concerns, please feel free to call me back. We will discuss your situation and I will provide you with a custom plan to come out of your high interest rate mortgage or a private mortgage and make renewal possible, and if not, get you a better refinance done at a bank if you qualify as of today's rates. Call me back at least 2 months in advance of your renewal date, as it takes that much time to fix things on your mortgage. Thank you very much, my friends, watching this video again in full, and looking forward to seeing you very soon in another video with another topic. Thank you very much.